fully backed, federally minded. Everything is ready for prime time, and RLUSD is one that I think is going to claim the stablecoin crown. It's going to be a good one today because I'm going to be talking with Jared Feldman of iTrustCapital, and we're going to explore a little bit about not only the Ripple news, but also what does this mean where stablecoins start to become active in your retirement strategy and also in the rest of the financial architecture. The stablecoin standard is going to start now. Let's just get into it. I want to bring in Jared real quick into the show. Jared, how are you?
Doing well. Just another day in crypto. How are you?
Listen, another day in crypto these days is a little crazy. We won't go into all of that, but definitely a different time. And I think this is probably good for the topic of today's discussion, which is how to secure assets when you do have volatile times like this. First off, I want to hit on a couple of things. iTrust Capital obviously announced the integration of RLUSD. This is available on the platform right now. Explain to me and to our listeners and viewers, why is stablecoins, our stablecoins, beneficial inside a retirement account?
Well, it's a really good question. Our clients are crypto investors, they're allocators into commodities, whether it's gold or silver, as well as digital commodities, Bitcoin, XRP, Ethereum, Solana. We have 90 different cryptos on the platform. However, a lot of people are purely long term investors. They just want to buy an asset, hold it in a retirement account, and take advantage of the tax deferral and then eventually withdraw during retirement. Our clients can withdraw in crypto or they can withdraw in stable coins or USD. But a lot of people want to take advantage of the tax sheltering nature of a retirement account by selling during the lifetime of their retirement account. If you have a profitable transaction, if you make a trade, if you're profitable in a regular non retirement account,
Right.
you get hit with capital gains taxes. But if you make that same profitable trade within a retirement account, it's all tax sheltered. You're not exposed to short or long term capital gains. When people make that transaction to go back to cash, they do so because they want to deploy the capital into another asset, or they believe the market is going to correct at some point and they'll have the opportunity to buy back in at their chosen crypto of choice at a lower price. Stable coins are a means of sitting in dollars the way that people traditionally have in USD, but to do it in a stable crypto that's denominated in dollars and tracks the price of a dollar, which is one. At the same time, stable coins in this day and age, and we can get into the Clarity Act if you'd like at some point during this conversation, they pay rewards on certain platforms. And our platform is one that pays rewards. We pay 2% for RLUSD.
Mhm.
And for clients who go back into cash and are waiting out the market for one way or another, they can go into RLUSD and earn 2% while they do so, which is a really powerful concept.
Well, I think this is something that a lot of people miss because yield versus safety, which is where I think this makes a lot of sense when you're inside an IRA. But also, when you think about the asset itself, obviously, Ripple announced just the audit with Deloitte. That was a big milestone now. And of course, it hitting a 1.5 bill. I think this is just continues to support the narrative that this is one of those stable coins that's going to be around for a very long time. And I think the cross chain capacity of what RLUSD is going to be able to do in the future is huge. So you guys have the opportunity to kind of pick and choose the best assets out there. You have one stable coin in the RLUSD. I know you have others that you offer. When you look at the activity right now that's happening, what has been the sentiment around stablecoins? Are clients starting to actually utilize them inside crypto IRAs?
The value proposition ties back into tokenization. If you look at asset managers around the world, if you look at some of the biggest exchanges that are now talking about moving all of their equity trading stocks, ETFs, they're talking about moving everything on chain and making it tokenized. They're not doing it out of the goodness of their hearts. They're doing it because it benefits their business.
Yep.
Building a bond portfolio or just any mutual fund, putting stocks and ETFs on chain allow for these organizations and financial institutions to create lower costs. That's a huge one, saving billions of dollars per year. It creates more transparency for their assets and for their organizations, which make audits easier. It leads to instantaneous settlement, which locks up money in clearing. And clearing is where, in between you executing a transaction and then settling the transaction, usually it's T plus one for stocks.
Right.
The funds that are caught up in clearing, and this is what they refer to as stuck in clearing, you're not able to really capitalize and make money on that money while it's in clearing. So instantaneous settlement's huge. And then ultimately liquidity, right? Having 24/7 liquidity and just more robust liquidity for any financial market is going to be profitable for the organizations that run it. Now, why am I going into this? Stable coins are almost the backbone of tokenization because in order for you to settle instantaneously, in order to move all this money seamlessly throughout the financial markets when you're tokenizing assets, is by utilizing stable coins for settlement and for the movement of money. And that's where all the value proposition comes into stable coins. Now, there are other value props for stable coins, don't get me wrong. But I think that when people are like, okay, why are stable coins going to proliferate and continue to grow? It's because of this tokenization narrative and how stable coins play a part.
I saw some data on the growth of this market estimated between 2 and 3 trillion. When I say this market, just stable coins, 2 and 3 trillion by 2028. I mean, you're talking a year, really a year and a half away into 2028. With that kind of growth potential, you look at the IRAs, you look at, traditional markets, banking, et cetera, that are going to play into this space right now. Where do you think this is heading, especially in terms of onboarding new clients that maybe have never had a crypto IRA or even a crypto account in the past? What do you think this is going to do?
The concept of monetizing a stable coin by earning rewards, and that's where we are now. When you look at us, iTrustCapital, when you look at other crypto providers that are paying rewards, we're at the rewards stage of stable coins. And when you earn rewards, if you earn interest, if you earn yield, if you earn any sort of income in a retirement account, that income is tax sheltered. So normally when you're earning any sort of income or interest, oftentimes it's taxed at ordinary income, and you are in a position where you're paying taxes on any sort of interest or rewards that you earn. In a retirement account, tax sheltered. So the tax sheltered, tax deferred nature of retirement accounts makes owning something like a stable coin that pays out rewards that
Right.
much more robust. What direction is this heading? And this is a really interesting segue into clarity. The Clarity Act is going to dictate what sort of rewards, if any, in what context will be able to be paid out on stable coins. If the Genius Act was the law of the land pertaining to stable coins, companies would be able to pay out rewards indefinitely. But if they do figure out a way, and I know that the banks are lobbying very hard on this right now, and there's a lot of negotiations occurring around this. It's possible that rewards will no longer be able to be paid out on stable coins for just having stable coins idle in your account the way you earn interest on cash. However, that doesn't mean that there won't be activity based rewards that are eligible for stable coins similar to a credit card. And when you look at what's going on in crypto with tokenization, all the new use cases that might come about for stable coins, there is going to be value on stable coins. There is going to be value on borrowing stable coins. And I think that as a result, there will be people and opportunities for people to be able to earn rewards or some sort of money on their money using stable coins. And anything held in a retirement account would be tax sheltered.
This is the thing. I was talking to some tax attorneys that are very crypto savvy, and we were talking about this very issue in one of our seminars that we do here. And I had a panel of attorneys coming in. They, of course, have been watching the narrative boil down between the ABA, the American Bankers Association, which is the lobby group behind that industry, against what the crypto industry has been trying to do, which is retain yields. However, the thought of a hybrid system where you have something that passive yields couldn't be paid, but active yields could be, meaning you have to do something to ingest those yields. Wouldn't putting your stable coins into a crypto IRA, wouldn't that I think that would be active, because you're actually doing something to put that to work in a protected tax environment. So I'm kind of curious, have you guys looked at that at all?
It just kind of depends on where the negotiations lead to and how they define active versus passive.
Right.
Because I've never in my financial career have ever heard about some constrictions on how you're able to pay out interest on an asset.
Yeah.
And it just comes down to free enterprise and being as long as you're not committing fraud or doing anything illegal, financial institutions have always been able to dictate how they
Right.
pay out interest, dividends, rewards, however you want to frame it. So this is a whole new world. My money wouldn't be on putting the stable coins into a retirement account being deemed as active. I would say they're probably going to deem just holding it idle in any sort of account would be passive. And I
Interesting.
think that they're going to make active as moving stable coins back and forth. That'll be like the most fundamental way that
Taking a
they
loan, some
a
sort.
loan, right. I
Yeah.
mean, they're gonna wanna make it feel like a credit card. That's the goal of the banks, in my opinion, is that they're gonna want to just limit the ceiling of stable coins to essentially be like a credit card when it comes to financial impact for people. However, I do think that maybe an activity like depositing your stable coin into a liquidity pool and then earning money as being a liquidity provider would be deemed as active. And then therefore there would be opportunities that proliferate as a result of that.
How do you see Ripple, of course, launches their new treasury management system. This is something that's new. It's moving toward a world where maybe you're going to have things like RLUSD, which is looked at in the same way that you see a dollar in a regular Chase or banking account. At some point, when we start to see stablecoins moving into bank accounts and that opportunity, where and what kind of opportunities would lie into the market of a crypto or digital asset IRA? Where would those connect in the future?
It's an interesting question. I think ultimately what companies will do is they will create ways for stable coins to be used as part of the rails, but they'll integrate it into the current system so people won't even know they're interacting with stable coins.
Yeah,
And
yeah,
an example of that is like you take your stable coin, you move it into a financial institution, they immediately take your stable coin, convert it into FDIC insured cash, use that cash for regular capital market activities like lending, collateralization, all sorts of different activities that a financial institution would partake in. And then they would keep an ample supply of stable coins to be able to move if people were to withdraw or make payments.
yeah.
I think that's the future that I see is that people won't even know that they're utilizing stable coins. It's just going to
Interesting.
be fully integrated and adopted into the financial system because of all those benefits I laid out before.
Yeah, for sure. Let's talk a little bit about gold because obviously gold and silver is available inside iTrust, and we've seen more and more people look at going into this. It's kind of that shift to physical stability. You guys reported a massive surge in long-term investors moving toward physical gold and silver within their IRAs. So this is kind of direct. I would say somewhat of a direct hit on these predatory gold companies out there that we watch all the time. Man, there are so many gold companies that pitch us to do ads. We just say no. But I am surprised at how much money they're spending to try to gain new customers. What is and makes you guys so special when it comes to gold and silver?
The reason why these predatory companies have so much marketing money to spend is because they gouge their customers.
Yeah.
And that's how we created a value proposition in the physical precious metal space is because we just took the position of let's just charge people fairly. And if you charge people in a fair way, then you'll get more
Yeah,
clients
big time.
and then you'll end up making more money than those predatory gold and silver companies, and that's exactly what we did, and it's been really successful. We have, the tens of thousands of clients that invest in physical gold and physical silver. There's a Venn diagram overlap of investment theories and philosophies between crypto investors and precious metal investors, macro hedge, inflation hedge, anti-government spending. There's a lot of overlap in terms of how these investors look at the markets, and that's why a lot of our clients invest in both physical metals as well as crypto commodities and digital commodities. And our gold and silver offering, the way that we create so much cost efficiency and fairness for our clients, is because it's backed by physical gold, backed by physical silver, guaranteed and vaulted by the Royal Canadian Mint. But the product is offered through Kitco, and they leverage a company that has a private blockchain to ledger and track all of the gold and silver trading.
Okay.
So it's physical. It's actually backed by physical, but the way that we create 24/7 liquidity and really low costs and not and also transparency is by the fact that these are tokenized real world assets that are ledgered through a private blockchain. So it's just a really interesting product.
We look at these regulated platforms that are coming out. Obviously, Ripple with RLUSD getting its regulatory alignment as a payment instrument. They're seeking, a federal banking charter or through the OCC. We're probably going to see more of those skinny master accounts happening. When you see companies that are going in that direction and they get to that level, how would that change the landscape, or will it add to the landscape of either crypto IRAs, digital asset IRAs in the future? How do you see that playing out?
I think there's just going to be more companies that offer crypto related products, period. And I think that these companies that are pursuing OCC federal bank charters are looking to directly compete with the banks. And the vision of these crypto companies not only seek to democratize finance, and that's the whole ethos of crypto in general, but they're also looking to revamp the financial system. And a lot of these banks, these legacy banks, are on rails from the 90s, or let's say early 2000s at best, and it's really difficult to turn that ship around. I mean, when you're a bank and you're a conglomerate and you have millions of customers and all of these different ways that your company runs, like software and even hardware, sometimes it's really difficult to change those systems. And not to mention you have shareholders, you have the board. So those banks are going to take a long time to get with the program. And when clarity passes, who better than to be able to build modern banks than these crypto companies. So I think that these crypto companies that are becoming banks are going to have some traits and characteristics of the previous system, because banking is always going to be banking. But I think that they'll incorporate crypto in a lot of ways that just make the experience better. One example is the wire system. Oh, heaven forbid you
Huge.
missed that wire cutoff, Paul.
Yeah.
And being able to use stable coins as part of the settlement process is going to eliminate a lot of the headaches with wires.
Yeah, I think this is, to me, this is an onboarding bonanza coming down the pipe. What you're dealing with today is really where crypto has been going into the financial market with one arm tied behind its back, going against the banking institutions. When that starts to change, whether it's through clarity or we start to see some of these banking license transacted, I just think you're going to have this massive group of consumers and retail finally making their way on chain. And once they get there, I think their next stop is going to be, all right, how do I diversify into IRAs? How do I diversify into other asset models? Because they're already reaching into money market accounts, et cetera. So I think this is going to be pretty huge for you guys. So I think you're up. Going to get some growth out of this for sure. It's going to be big. When you look, all right, so we talked shortly about clarity. What what is your thought on this thing passing? Because everybody, we are talking to so many people in Congress. We had Warren Davidson on this week. I talked to Bernie Moreno. Um, I get mixed feelings on whether or not this is going to make it through. What do you guys feel right now?
It's really hard to speculate because people thought that it would happen in March, and then they thought it would happen in April, and now they're saying maybe it'll pass at the end of April. That could be considered wishful thinking. We are optimistic on something getting done. For me personally, I'm not really sure if I see the wisdom in rushing something across the finish line unless lawmakers, and I'm not a lawmaker, unless lawmakers are convinced that it would be impossible to pass something after the midterms. I personally don't quite understand why the midterms are such an important barometer, unless the argument is, well, everything's going to just shut down in September because everyone's going to be focused on their campaigns. And then November is the campaign. And then they're going to wait until people get sworn in into their new seats at the turn of the year. And then that for me would be an argument of like, okay, then we're looking at like March of 7, and
Mhm.
we just finished March of 2026. So then we're looking at 12 months out. So I can understand the strategic argument of, well, if you don't do it now, then it's not going to get done until 2027. And then if you wait till 2027,
Yeah.
and people might start to look at 2028 and completely walk away from the table. But the way I see it is that a lot of these lobbyists in Washington, whether it's Coinbase or the blockchain association, they do a really good job of catering and working with people on both sides of the aisle. So I don't think you need a Republican or a Democrat majority in either house or either chamber in order to get something done. But I think that if you're looking at it from the perspective of like gridlock in Washington, and if we don't get this done now, it won't be able to get done for another year. That might be a really reasonable argument, unfortunately.
I'm listening to it from both sides because I think prior to Trump and World Liberty Fi getting really involved in crypto, this was somewhat of a bipartisan topic. And it has only in the last 12 months become a little bit more divided. If, the Senate is lost and the House comes through Democratic, I still think this is a bipartisan topic. Now, can they push the whole issue around the Trump administration into a different, lens? But I think the real thing is how much damage are you doing to American investors if you're not allowing this to get through? And I think that will, at some point down the road, will be on their head to get this done. So hopefully we get it done before the midterms. If not, maybe it will fall into the strategy you're talking about right there. What else is new at iTrustCapital that I should know about?
We Last year we launched non-retirement accounts. So we have the premium custody accounts are our non-retirement account product. People asked us over and over again to create an account that has the same level of institutional storage, liquidity, and staking, as well as security as our retirement accounts in a non-retirement account form. And we delivered on the premium custody account. If people ask why is institutional custody important, if you have an account at a regular exchange, if you download an app that someone recommends, most of the time you're not getting institutional storage. Why is that significant? Because when you have your funds on an exchange, oftentimes they hold it off on balance sheet. And
Right.
what does on balance sheet mean? On balance sheet means that they can use your capital in the event of a bankruptcy, liquidity
You're
event,
exposed.
and they can use it to settle with creditors, and that's your money. Whereas the way we structured our accounts is that all of our accounts, retirement and non retirement, are backed by what's called a qualified custodian, and all funds are required to be held off balance sheet and are bankruptcy remote, meaning they're not subject to creditors in the event of a bankruptcy. Now, we're not going anywhere, our custodian's not going anywhere, but our clients have every right to demand the highest level of regulatory protection on their accounts. And that's where the premium custody account comes into play. We also launched a treasury account, which is an account for entities. People really wanted to be able to onboard their trust, onboard their business, their LLC, onto iTrustCapital. If you are a believer in crypto, if you're a believer in gold and silver, why wouldn't you want to also allocate on behalf of your business or your trust in addition to your personal portfolio? And that was the genesis for the treasury account. So those are the newest things that we have going on right
Is there anything within the treasury account? Because we have a lot of business owners that watch this show. We use this show in our seminars as, explanations of what's going on in the market. Are there any real critical tax benefits for a business entity versus an individual when you look at these treasury accounts?
The reason why people have trusts to begin with are mostly an estate planning tool. A
Yeah.
lot of people want to be able to control their money and protect their money during the course of their lifetime, as well as when they eventually pass away. And the best way to do that is through a trust. You can dictate who gets money and when. Money in a trust bypasses probate, which is really important because of the trustee and the beneficiary components, and you can also control when people get money, how they get it, etc. So that's really important. A lot of people believe that having money in an LLC gives them some protection when it comes to liability, which isn't really an opinion,
Yeah.
it's a fact. If you spin up your business in an LLC, you protect yourself from any sort of liability that goes along with the business that's wrapped in the LLC. So people have trusts, LLCs, S corps, etc., for those very purposes, and that's why they want to be able to allocate using those vehicles.
Listen, well, estate planning is a big part, I think, of once you've developed wealth, that's your next step is really to start to put a good strategy in and estate planning. For you guys listening, you should definitely check out with your own attorneys, your own tax planners. They can help you get those kind of things. But it's good to hear that you guys have so many new products out there for sure. You guys are also doing some things around matches because there's a lot of shakeups in the crypto IRA space in the sense of acquisitions, things of that nature. If somebody wanted to move over from another crypto IRA, is there any benefit going to iTrust for you guys?
It's a great question, and it kind of ties back to the question you had before about the predatory gold companies. There's also predatory companies in crypto, and there's a lot of crypto IRA providers that offer retirement accounts for crypto that have outrageous fees, whether it's a monthly fee, a custody fee in which they charge to store your
Fees on
assets,
fees, man.
fees on fees, monthly fees, annual fees, storage fees. They also charge a lot higher than we do for just the regular buy and sell transaction fees.
Mhm.
And we take a lot of pride in the fact that our community wants lower prices and we deliver on lower prices when it comes to fees in general. So that is something that we've embarked on a journey to onboard as many people that have crypto IRAs as possible. And
Okay.
our current foray into that is offering a 2% match on anyone that has a crypto IRA with another provider that wants to move it over. A lot of these crypto IRA providers will let you move over the crypto in kind, meaning you can move your Bitcoin in a retirement account to you can move your Bitcoin over to us in kind, which means that you won't have to sell it before you move it, which is really important so you don't get
Yeah,
exposure to the market
right.
while you're moving those money. At the same time, we also have a lot of crypto companies that do not move over the crypto in kind for an IRA transfer, and they make you go to cash. A lot of people are still moving the funds over because they end up doing the calculus on their own and they're still paying more when they have those outrageous fees with the other provider. So they move it over to us cash to cash, and then we'll pay 2%, whether you move cash or crypto if it's coming from another crypto IRA provider.
Does that okay, so that's interesting because Bitcoin being down, Ethereum being down, if somebody went into an IRA at, 70, 80, maybe 2,500 or 3 on Ethereum, does that create a tax loss inside the IRA that you could use?
If you ever sell within an IRA, it's completely tax sheltered. There's no basis, there's
Okay,
no
alright.
offsetting with gains and
Yeah,
losses. If you take your Bitcoin and you move it from one IRA to another, if you take your XRP, move it from one IRA to another, completely tax sheltered. If you
okay.
sell the XRP in an IRA and you move over the cash to
uh
us, that's also tax sheltered.
Okay, alright, so that's
You're not gonna
interesting.
pay taxes on that. The only risk, quote unquote, is if the
Market,
price of XRP goes
yeah,
up while the funds are moving, then you end up potentially having less XRP on the back end. However, people are super patient. A lot of these clients end up dollar cost averaging back into the market. Sometimes they end up with more crypto than they originally had.
yeah.
And we also do that 2% match, which kind of helps
What
a lot.
has been the turnaround time on those for those who don't play nice and they make you liquidate it inside the IR the IRA itself? Is it like next day plus 1, plus 2, or longer?
Anywhere from it's 3 to 10 business days,
Oh my gosh,
unfortunately. It
wow.
depends on the provider, but these providers aren't in a rush to lose the
Yeah,
business.
lose the money for
They
sure.
they deploy delay tactics. We certainly do our best to make sure that all of these transfer requests are expedited, especially when people are selling in order to make this move. But
Yeah.
that is a reality. But that is also what the match is supposed to go toward.
Well, yeah, the 2% is a big deal. That could be huge. Is there a max on that? Like how much you can get in the match?
It's 500,000 total
So
value of the
10K.
transfer. So the most that we'll pay out is $10,000
Yeah,
off of a
okay.
$500,000 transfer.
That's a lot, man. Woo. That would be a great deal especially for a lot of XRP holders out there. So, anyway, Jared, thank you so much for coming in today. This is good to kind of get your brain on where the markets are heading. I love the situation the industry is in right now because even though the markets are down, the opportunity I think is getting ready to go exponential. So, good to see you and thanks for stopping in. We appreciate
Thanks
it.
for having me.